So tonight we're going to start on page 66, and we're going to start talking about contract law. Yeah.
I went to go look. It's not even on here.
Yeah, I'm seeing it. It's not up.
So what?
The score is like, it's not on there. It's just blank. Everything's blank.
Oh man, did I forget to hit save?
That'd be great.
Oh, I got to re-enter them again.
That's
Oh well, okay, so your grades are not in Moodle, but I will put them in tomorrow. I put them in, but then I didn't hit enter. Yeah. Well, thank you for pointing that out. I've done that before. It's really a headache. So, those of you that are grading Moodle, make sure you hit enter after you hit save and hit the scores. Okay, I'm sorry. I meant to put that up. But I will do it tomorrow. Okay, so tonight let's talk about contract law on page 66. All right, contract law again is civil law. Like tort law is civil. Contract law is an area of civil law. Now what does that mean? No jail time, no penalty, right? But you could have a breach of contract that also is a crime. But I'm not really going to focus on that so much as I just want you to remember that contract law is civil law. And it's enforced, therefore, in civil court. Now, when we talk about contract law, the law of contracts, I just kind of want to give you a basic concept of what we mean by contract law. Usually when I say contract law, you think of a written document, a formal written contract. You know, it might be multi-pages long, it might be 100 pages long, like a union contract, or usually fairly lengthy. That's a formal contract, and so when I'm referring to a formal contract, it's typically going to be a very detailed written document for real estate or for business or sale agreement or something else. And yes, that is contract law, absolutely. But what I want you to understand is when we talk about the law of contracts, it's more than just the formal written document. The law of contracts basically is that law that governs any type of an agreement or obligation that is enforceable in a court. It may be a formal contract, but we also have contracts that can be created informally. So for example, a sales contract. Anytime you buy an item, like if I went and bought this water bottle at 7-Eleven, or I buy a Diet Pepsi out of the machine over here, or any kind of physical thing, automatically that falls under contract law. It's called a sales contract under the commercial code, which we'll get to in a minute. Now I don't go, when I go to Safeway or whatever and buy this bottle, or I buy a package of hamburger, I don't sit there and fill out a big long contract with the clerk at Safeway. I agree to buy 0.98 pounds of hamburger, and we have this big long contract. But there is a contract there, even though you don't really think about it. It's going on in the background by law, a sales contract. So we have formal contracts, we have contracts for the sale of items that occurs sort of in an informal level. And then we also have contracts that are created potentially verbally, or by your conduct, by what you do, or because you received a benefit of some type, and therefore you have an obligation to pay for it. And we'll talk more about that in a minute. So the law of contracts is more than just a formal written document. It is, and here's basically what I want you to know in one sentence. Contract law is the law of legally enforceable agreements or obligations. Legally enforceable agreements or obligations. Now, when I say legally enforceable, what I'm referring to is a judge can enforce the agreement or the obligation as a contract. And therefore, if you breach the contract or you do not fulfill the obligation, then a judge in a court case, a civil court case, can issue a remedy, either a legal or an equitable remedy, monetary remedy or a court order. So Contract law is, yes, formal written contracts, but it's also agreements and other things that we do that, and here's the key, that are intended to be the type of agreement that you can go to a judge to enforce if it is not followed by the other party. Now, again, I want you to kind of understand just the concept of contract law. So, we make agreements all the time. Sometimes those agreements we intend to be a contractual obligation. That is, we can go to court. But we also make agreements all the time where we don't intend for them to be a contract. So, let's say, for example, we're talking about, okay, Friday night we're going to go see a movie. And I'll meet you at the movie theater there in Independence. And we'll go see, I don't even know what movies are playing anymore. I haven't been to movies in so long. What movies are playing? Star Wars 85, right? The Return of the Drone, I don't know. So we're going to go see Star Wars. And I agree to meet you at 7:30 at the movie theater, and I don't show up. I fall asleep, I take a nap, I don't show up, whatever. Hey, we had an agreement, so you sue me, right? Breach contract. Like, what are you talking about? Yeah, that's an agreement, but that's a social agreement. We don't intend for that to be a contract. We don't intend for that to be the type of obligation that if one side or the other does not fulfill it, then you go to court. And so, not all agreements are going to be contracts, is the point I'm making. So I'm going to be using that word intent a lot tonight, because intent plays a big part in contract law. Do the parties intend for the agreement to be enforceable in court, or not? Do they intend to have a contract, or not? And that sometimes is an issue that a judge will have to figure out to determine if there is even a contract to begin with. All right. So with that said, sometimes contracts have to be in writing. We'll talk about those here in a few minutes. Sometimes they don't. We'll talk about that too. But all of them are going to share these same three basic elements for an actual contract. This will be, as you can see right here, 100% for sure, page 66. 100% for sure, a fill-in-the-blank question on the final. So I'm giving you right now 3 points. If you get this wrong on the final, it's your fault, not mine. Because I'm telling you right now, this will be a test question. Here's the question. What are the 3 basic elements of a contract? Yeah, perfect. If you want to take a picture, that's fine. The 3 basic elements of a contract. Offer. I make you an offer. I'm hoping that you'll enter into a contract with me, so I make some kind of an offer to sell you something or whatever, provide a service. That offer is accepted on the terms of the offer. And we have what we call consideration. Consideration is an exchange between both sides. Doesn't mean you're being nice to each other. It means that each side is doing something, giving something to the other side, like money in exchange for a bottle of water, or a trade. I'll trade you my water for a pack of gum, a barter. Or I'll mow your lawn if you'll paint my fence. That's also a type of barter, a service for a service. So these are the 3 basic elements of a contract. And again, fill the blank question for sure on the final. So make sure you remember that. OAC. Offer, acceptance, consideration. Now, I put plus signs here because you have to have all 3 and they have to line up with each other. Kind of like negligence. Duty, breach, injury, causation. They have to line up with each other. So you must have an offer. It must be a true, actual offer with the intent to start a contract. It must be communicated to the other side. Then it must be accepted on the exact terms in a timely manner. So, the offer didn't expire, you communicated it by the deadline or whatever the case may be. And there was an exchange going both ways. So on the final, this will be fill in the blank. I'm going to say that over and over. And again, just as a reminder for those of you that just came in, on the final, we'll have fill in the blank questions again, and make sure you fill in the blanks. If you don't, you're going to not get all the points that you're entitled to. So when I ask you like a multiple choice question, make sure that you go through these three elements. Was there an offer? Was it actually accepted properly? And was there an exchange both sides? If any one of those three is missing, no contract. And I do ask questions like that. You know, I'll give you a little example like Bill and Ted doing something, and I'll say, was there a contract here? And I want you to go through those three elements when you analyze it. That's what a judge does in the real world. I mean, it seems so basic, but there's a lot of nuance going on that we'll talk about more later on. All right. Again, for you all that just came in, I thought I had your grades posted, but I forgot to hit save on Moodle. I entered them all, but I didn't hit save. So I apologize for that. I did that yesterday, actually. But I will have them entered by tomorrow. Actually, I might go back to my office after class tonight, try and get them entered. That way you can look, okay? So I know you're all wanting to know what your grades were. All right. And again, when you look under grade on Moodle, the score will be out of 200 points. And then if you didn't do so well, the extra credit will be added on your score, so you can bring your grade up. Okay, page 67. This is also a very high probability, highly probable test question. What are 4 types of contracts? And that's list 4 off of this page. Fill the blank. What are 4 types of contracts? All right. Now, these are terms that we use in contract law. They're fairly basic. And I'll be using these terms throughout our discussion here and then also on the test. And I want you to be able to differentiate between these types of contracts and kind of know what these terms mean, because they're different from each other. And there's a lot of differences in how contracts are formed depending on the type of contract they are. All right, so let's begin with the first 2. The first 2 types of contracts are unilateral and bilateral. Unilateral, bilateral. And I want you to be able to differentiate between those 2 types. And it's pretty straightforward. Unilateral is one-sided, right? Uni, one. Bilateral is two-sided. Bi is 2. Like a unicycle, 1 wheel, bicycle, 2 wheels, right? A unicorn, a horse with 1 horn. A bicorn, a horse with 2 horns. I know it's late in the day. That's a joke. Come on now. It's a bad one, I know. So, what do I mean? Unilateral. One promise is being made to do something in the future. Bilateral, 2 promises are being made. Each side is promising to the other side. And they're fundamentally different from each other. So let me explain. A unilateral contract is where one party, let's say it's me, is making an offer, a promise to do something in the future. Now typically there's going to be something like a reward offer, or a lottery, or a contest, or an offer that's made to the public to perform a service of some type, asking for a service. So like here I give you an example. I'll pay $500 to the first person that will paint my house. So I'm making kind of an offer to the public. Or a reward offer. I will pay $500 to whoever returns my stolen canoe that got ripped off last week. But my bicycle or whatever. So a reward. Now I am making a promise to the public. If you bring me my stolen canoe or bicycle or whatever, I will pay you $500. Now I'm not getting a promise in return. I'm making a promise to the public. I don't know if anybody will ever respond to my offer. I don't know if anybody will accept my offer. But if they do, if they show up with my bicycle, they've now accepted and I owe them the money. So a unilateral offer or a unilateral contract is where one side is promising to do something in the future, generally to the public or a group, all right? A lottery. whoever picks the winning 8 numbers wins the Powerball or whatever. That is an offer to the public. Now, nobody's promising back that they will pick the correct numbers, but if they do, then they win the money. A contest is another example of a unilateral offer. Probably the best example I can give you there is a golf tournament. So maybe we're doing a golf tournament to raise money for scholarships, and we have a hole-in-one contest, right? You see this all the time in golf tournaments. So whoever hits a hole-in-one first on whatever hole it might be wins a brand new car, like a Prius or something, right? You've seen that, you've seen those all the time, where they win $10,000 or 5 Bitcoin or whatever, right? So that's a unilateral offer. If you hit a hole-in-one, you're the first person to do so, you win the car. But you're not promising to hit a hole-in-one when you sign up for the tournament. You're not giving me a promise back. I'm making a promise to the group. If whoever does that wins, then I owe them the car. Did you guys know you can buy insurance for that? If you ever do a tournament or have a raffle or something, you can buy insurance so that if somebody does hit a hole-in-one, the insurance company will pay it. You don't have to. Yeah. I'm seriously not joking about that. It's not that expensive either. All right, so one-sided, one promise, bilateral. Both sides are making a promise. So now what we have is a situation where each party to the contract is making a promise to the other side. So for example, I promise to pay you $500 if you will paint my fence by June 1st. And then you today, what's today, February 20th, you agree right now today, yes, I will paint your fence, or house is what I put here, for $500 by July 1st. So we've now exchanged promises today. Guess what? We just made a contract today. So we now both have a binding obligation, effective as of today, February 20th, for something that's going to occur in July. So that's why we call it bilateral. Both sides are exchanging promises to do something in the future. Multiple examples. Construction contract. I'll pay you $300,000 if you'll build me a house and have it completed by October 1st. So we enter into a construction contract. Or a real estate purchase agreement, or a business purchase agreement, or whatever. A mortgage for a house. I'll make monthly payments if you'll give me a loan so I can buy the house now. Those are bilateral contracts. We're promising to do things for each other or with each other in the future. So how do you tell the difference? One promise, two promise. Simple, right? So on the test, I'll give you a little fact pattern again. If there's two promises, it's what kind of contract? Bilateral. One promise only, unilateral. If you remember that much, it's real simple. There's a twist, however. There's always a catch, right? Here it is. A unilateral can convert to a bilateral. So it can start off as a unilateral, but turn into a bilateral. Here's what I mean. Let's say it's a reward. So I post a reward that says $500 to whoever will return my stolen bicycle. You find my stolen bicycle in Portland, when you're up in Portland. And so you call the phone number, and you say, hey, John, I found your bike, I'm up in Portland. I'll bring it down to you in Monmouth if you'll pay me the $500 reward and pay me an extra $50 for my gas money. So what just happened? I say, yeah, that's fine. I'll pay you $500 for the reward and another $50 for gas. We just converted it, right? Because now we've exchanged promises. So that's kind of a tricky little thing. It may start off as a unilateral and convert to a bilateral. So again, focus on how many promises. All right, the next two. Express, excuse me, versus implied. And I've written here this word conduct. That's what that says. I know it's hard to read. All right, express and implied. So we use these terms in contract law, well, all types of law all the time. but especially in contract law. We express and imply. So what do those two words mean just in general? So express basically means something is stated clearly up front. You know what the terms are exactly. You don't have to figure it out by implication or thinking about it. You basically know what the deal is. Or as I put here, it's said out loud. So this might be an actual negotiation. How much do you want for your iPhone? And you say, oh, I want $500 for my old iPhone. And I say, okay, I'll buy it for $500. We actually negotiate. That's an express situation. It's said up front, it's said out loud, you know what the terms are. So an express contract is a contract where the terms are actually negotiated, or where there's a label, like on the hamburger at Safeway. That's express. I know exactly how much it weighs. I know when it was packed. I know the exact price. So that's a form of an express, upfront, you know what the terms are. Implied means something a little different. Implied means that something is not stated clearly, or it's created by the circumstances or by what you do, your conduct, and therefore a contract will be created even if you didn't directly negotiate it or specifically enter into it. It'll be created by law or by your conduct, by what you do. So let me kind of give you an example of the difference, in a little bit different way, of express and implied. All right? So express. This would be an express statement. You ask me, what restaurant do you want to eat at Friday night? And I say back to you, I want to eat at Momiji's. I just told you exactly what I want. That's express. Clearly stated, you know my answer. Okay, here's the same thing, only implied. John, what restaurant do you want to eat at on Friday night? And I say, gosh, I'm not sure. I heard Mendy's Pizza is really good. Now, I didn't say I want to eat at Mendy's, but I implied by the way I said it, that's where I want to eat, my conduct. You see the difference? It's subtle. Express is clear up front. Implied is you got to kind of figure it out. So, an implied contract example. This could be something created by law, an obligation that you incur from the circumstances. So for example, an emergency room trip. So let's say I get into a car accident and my leg is broken and I'm unconscious and the ambulance comes and gets me at the scene of the accident. They take me to the hospital. I'm still unconscious. They take me to the emergency room for emergency surgery and they fix my leg and they stop the bleeding and I'm still unconscious. I never wake up that whole time. And then a day later I wake up. I'm like, whoa, what happened? Well, you were in an accident. We took you in the ambulance to the emergency room, the doctors patched you together, and here you are in recovery. I'm like, okay. So now I get a bill, right? For the ambulance, for the emergency room, for the surgeon, for the anesthesiologist, for the aspirin that costs $3,000. So I get this bill. I'm like, hey, I didn't negotiate that. Well, I received a benefit. So it's implied by law that because I received that benefit, I will have to pay, well, my insurance will, and then I pay my deductible, what the costs are, right? It's implied as a matter of I received a benefit, implied by law, created by law. Express would be where I actually negotiated with the ambulance guys. So I'm sitting on the side of the road bleeding out. Hey, how much to go to the hospital? And they're like, well, that'll be $1,000. I'm like, oh, that's pretty spendy. I'll just call Uber, right? Come on, guys. Contract law is so boring. I got to make jokes. You got to laugh at it. Just somebody calling Uber. I got to laugh. All right. So it's implied that I'll have to pay for it. Here's another example. So let's say I go into a hair salon, a barber shop. I sit down in the chair, and the barber comes up, puts a little smock on me and everything. And we start talking about the weather. I mean, golly, isn't it kind of weird weather? We talk about fishing, we talk about baseball, we talk about everything in the world other than having my hair cut. The barber starts cutting my hair, which doesn't take very long, obviously. And then at the end, the barber says that'll be $15. So I'm like, what? You know, we're talking sports here. No, my conduct created that contract because it's implied when I sit down in the barber chair and the barber starts cutting my hair and A, I don't object, and that's why I went there to begin with, that I now will owe the money for that haircut. So it's implied by my conduct, by what I do. So that's an implied contract. Now for you guys on the test, I want you to be able to differentiate between the two. So basically, express will be any form of actual negotiation. It could be text messages, it could be face-to-face, it could be a label, it could be a price tag, it could be, you know, anything that tells you what the deal is. The implied will be something like the hair salon example that I gave you, where there was really no discussion whatsoever, but your conduct created the contract. All right, the next two. Excuse me, executory versus executed. So essentially, in plain language, executory means not yet completed, and executed means it's completed. It's done and over with. Executory contract may be a contract that has started, we've reached an agreement, but both sides still have something left to do. So for example, I'll pay you $500 if you paint my house by July 1st. You agree to paint my house by July 1st for $500. We agree right now, bilateral express contract. But you haven't painted yet, and I haven't paid you yet. We do have a contract, but we both still have to do something. So that would be an executory contract. We still have to do something. You paint my house. You're done, but I still haven't paid you. It's still executory, all right? Now, once I pay you, you're done, I'm done. Now we're going to call it a completed contract or a fully executed completed contract. Now, executed sometimes will also refer to a contract that's been signed by all the parties, but it still has something left to go, like a loan or closing on a house or something. Excuse me, that's caught in my throat. So, easy enough for you guys to remember, not fully completed, right? Fully done and over with. Now it's like, who cares, right? Who cares? Well, there's a number of reasons why this matters. Number one, if you want to modify a contract, it needs to be executory. Once it's fully done and over with, you can't modify it because it's over with. You got to start a new contract. Part two is warranties and guarantees. Oftentimes warranties will not begin until you have a fully executed contract. So like an example of that would be in Oregon. If I buy a new house from the builder, there's a 1-year warranty that goes along with the new house. The builder has to fix anything within 1 year, basically no questions asked. That begins when you have occupancy, which is the executed contract. So that's why that matters. All right, now here's where it gets, yeah.
Oh, I was say, with the implied contract versus express contract, does that fall on the guys, like also, or like, you know, it says by getting on this ride or into this premises, you assume what you.
Oh, okay, that can be an implied condition to a contract.
Okay.
Yeah, an implied component of a contract,
Be
absolutely.
implied, not expressed.
Yeah, so it's implied, I'll give you some other examples. If I buy a mountain bike, it's implied that I can ride that bike on trails in the mountain, right? It's called an implied warranty of fitness for a particular purpose under the Uniform Commercial Code. So that's a form of an implied condition. Or if I buy a blender, it's implied that it will blend by the name. So yeah, the word implied means, you know, it can be used in different ways. Really all I want you to know is conduct. Your conduct can create a contract. It's kind of like the old adage, your actions speak louder than words. So, and it can also modify a contract. So if you've got a contract, and like let's say the contract is for you to pay rent on the first day of every month. but you pay it on the 15th day every month for like 3 years. And I accept it on the 15th as your landlord, and I don't ever complain about it. That's an implied modification of the contract from the 1st to the 15th. And so if I go back through and say, oh, I'm going to throw you out now because you're not paying on the 1st, you would say, hey, wait a minute, I've been doing this for 3 years, you never objected, so it's implied that you waived that and we modified it. So that word implied can come in different ways. It all comes down to conduct, really. All right, so first of all, back to unilateral and bilateral. Of these two, which are more common, do you think? Yeah, bilateral, right? Because that's really that's the whole point of a contract, if you think about it. You want the other side to guarantee what they're going to do. That's the whole point, really. Express or implied, which do you think are more common?
Express.
Express, exactly. Yeah, that's good. Again, that's kind of the whole point of contracts. You want to negotiate, right? And then executory executed, that those are going to always apply every time. So, here we go. You can have combinations of these things. So we can have a bilateral express executory contract. So it's two-sided. We actually negotiated, but it's not yet completed. We could have a bilateral express executed contract. We actually negotiated, both sides agreed to do something, and both sides have fully completed what they're supposed to do. We could have a unilateral express executory contract. I make an offer for a reward. You show up with my bicycle, but I haven't paid you yet. So that would be unilateral express executory. Once I pay you, unilateral express executed. So again, on the test, I want you to differentiate between those and be able to pick combinations of them out. You guys can kind of quiz yourselves on Saturday night when you got nothing to do, right? Is that unilateral or bilateral? All right, page 68. More vocabulary terms I want you to know. So let's start with the Uniform Commercial Code, abbreviated UCC. I want you to know that abbreviation, UCC. So first of all, let's break this down. Uniform, meaning the same. Commercial, meaning business. And code is written law. So uniform business law. So here's the basic idea in a nutshell. The Uniform Commercial Code is a group of laws that are intended to be the same from one state to the next. That way, we have the same, more or less, business laws from one state to the next. Every state, all 50 states have their own legislature, and so instead of each state having a whole bunch of different business rules, which would be very inefficient, we have the Uniform Commercial Code, which the legislatures in each state can adopt. So we have roughly the same business laws from one state to the next. Not exactly the same, but more or less the same. So that's the concept behind this whole thing. Now, the Uniform Commercial Code is made up of 9 different articles, right here, articles, that deal with lots of different areas of business. The one I want you to know is Article 2, right here. And on the test, I will refer to this as Article 2 of the Uniform Commercial Code, or I may abbreviate it and say UCC Article 2. All right? Now I'm going to come back to this page in just a minute, but I want you to flip over one page. Page 69. And you know, this won't, the only thing that's going to be on the test here is Article 2. But I want you to have, just for real world, because this is real world business. I deal with this all the time, as an attorney. So these are the various different articles. So you can see there's 9 of them in total, and then some of them have sub components to them. But just so you have a general idea of what we're talking about. Now, for those of you that are going to go into banking, for those of you that are going to go into accounting, or business operations, or lending of any type of lending, trucking, shipping, trains, trains, planes, and automobiles, shipping. You're going to run into the Uniform Commercial Code. If you operate a warehouse, you're going to run into this. So just to give you some idea of what we mean when we say uniform commercial code. So Article 2 is what we're going to focus on. I'm going to come back to that in a minute. But you can see here, if you lease equipment for your business, this is the article that applies. If you have software like Microsoft Office, this is the article that applies to those type of transactions. Negotiable instrument, a check or a promissory note that you have for your bank is a substitute for cash, and the form it has to be in to be legally enforceable as cash. That's the law that governs that. A promissory note, which is debt, that's where you're going to find the rules about the form of a note. Bank deposits, so Article 4 deals with when you open a bank account and all of that. Article 4A is electronic fund transfers. Letters of credit, which are very common in large business transactions. I won't test you on all this stuff, okay? A letter of credit is basically where a bank will guarantee payment of the buyer so that the seller knows they're going to get paid. International transactions, they're like mandatory, because that way you know you're going to get paid if you're going to export goods, and you'll get paid by your bank. That way you can get paid locally. Warehousing, bills of lading, that's for shipping. The bottom one there, Article 9, for a secure transaction, this is where you loan money to somebody, and they're going to make payments to you, and if they don't pay you, you want to take back what you sold them as collateral, go repossess it, right, repo man. So you have to file what's called a UCC-1 form to make sure that with the Secretary of State to secure your lien. If not, and they go bankrupt, you can't get paid. You're not in line to get paid, or you can't repossess the item. All right, now, again, I won't test you on anything other than Article 2. So let's go back to Article 2. Page 68 again. Excuse me. All right. Article 2 of the Uniform Commercial Code is the law that governs the contract for the sale of goods, both new and used. So this is the law when I go into Bi-Mart and I buy a bottle of water. I don't sit there and write out a big long contract with Bi-Mart to buy a bottle of water. What's going on in the real world is this law is writing a contract in the background. So that if I buy the water and it's contaminated, and I want my money back or whatever, this law is going to tell the merchant what they have to do, or what remedies I have, when things have to be delivered, that kind of thing. So all sales contracts for a good are covered by this law. So what is the word good? I want you to know that. It's a term of art. A good is a tangible, movable piece of personal property. All right, so let's break that down. What does tangible mean? Physical, you can touch it, exactly. So bottle of water, my mug thing here, this document camera, that table, cars, anything that's tangible, physical item, all right? Has to be tangible for this law to apply. So if it's an intangible, what's intangible mean?
Air.
Air, yeah, it's not physical, right? So yeah, if I were going to sell you air, a bottle of air, well, the bottle would be good. Services, exactly, is an intangible, but there are other intangibles as well. Patent, copyright, trademarks, service marks, logos, royalties, licensing, account receivables, those are all forms of intangibles. So patents and trademarks and copyrights are what we call intellectual property. They have value, huge value. I mean, royalties for the collective works of the Beatles, Michael Jackson, Led Zeppelin, huge amount of money. The trademark Google, right, Microsoft, all that, worth huge amounts of money. So those are intangibles. So if I'm selling you the rights to play my music at your business, that's an intangible. So this law would not apply. It only applies to the sale of a physical item. Movable, meaning what? it's not attached to the ground, right? If it's attached to the earth, you can't move it, we call that a fixture. And I'll talk about fixtures in 2 weeks in more detail. So in other words, it's not attached to the earth in a permanent way. Like this building started off, all the components, right, before it was made into a building, when they were being delivered on the truck, they were goods. But once they're put into a building, they're no longer a good because they're part of the earth now. It's called a fixture. And we'll talk about that later on. All right, that's pretty straightforward. All right, so both new and used, there are different rules for each, primarily for new. And in addition, in the Uniform Commercial Code, we have the concept of being a merchant. A merchant is a professional dealer in goods, a professional seller of goods. And there are different rules if you're a professional versus a non-professional, like if you're having a garage sale or something. You're held to a higher standard, basically, as a merchant. I don't get into that too much. The main thing I want you to know is what is a good, tangible item. All right. So the next two terms I want you to know, void, voidable. And I want you to know the difference between them, voidable. So the word void means invalid, no good. Null and void, not valid, not legal. In contract law, this refers to an agreement, offer, acceptance, consideration, bilateral, express, whatever. But it is illegal in and of itself, and therefore neither party to the contract can enforce it in court because it's an illegal contract. It's void. It doesn't create any legal obligations. So, for example, let's say like a hit contract. So an assassination, right? So let's say my wife goes on Craigslist and posts a job there, right in the job section on Craigslist. Wanted assassin to kill my husband, right? So she gets a call from the local neighborhood assassin, Jason Bourne, I don't know. So Jason Bourne calls up and says, yeah, I will, I'll take the job. That's going to cost you 5 Bitcoin. 1 Bitcoin up front and 4 upon completion of the job. So she enters into a contract with him to shoot me. All right? So she pays him the Bitcoin, and he then undertakes the task, right? So, boom, shoots me. Fortunately, I had my life-proof case on my iPhone, and it bounced off, and I didn't die. So she sues him for breach of contract, right? Okay, so, would that be unilateral or bilateral? I'll pay you 5 Bitcoin if you'll kill my husband.
It's illegal, no contract.
Well, it's illegal, you're right, but let's go back through and work our way through. Bilateral, express or implied? Express, executory or executed? Ha, see what I did there? Not executed unless it completed. UCC apply to that? No. Would the Uniform Commercial Code apply to that contract? No. Why? It's a service, right? And yes, you're right. It's void. It's illegal. A judge is not going to enforce it, and the judge can put him in jail, of course. All right, or a drug sale. Another example. So let's say that I actually had this case once. A guy's in downtown Portland. He's on Burnside downtown. He goes to buy a baggie of white powder from the local corner drug dealer. Thinking it's meth. Pays the drug dealer, I don't know, $200 or whatever it was, and goes home and proceeds to use it, and it doesn't work. And the reason it doesn't work is it's not meth, it's Enfamil. Do you know what Enfamil is?
No.
Baby formula.
Oh, I was
Right?
thinking about it.
Yeah. So it's a little, it's powder, and it's in this little plastic baggie. So the guy calls the cops. Hey, it was supposed to be drugs, and it was Enfamil.
So stupid.
This serious? Yeah, I did. Police like, oh, jeez. I did not prosecute that case. I'm not going to waste my time. Right? So the guy sues, let's say. Again, bilateral express, Article 2? Yeah, sale of a good, drug dealer is a merchant, right? No, that's illegal. So those are both crazy examples, I know, but you get the point. Neither side can enforce the deal. Voidable is different. Voidable means the contract itself is legal. Like if I want to sell my car or an iPhone or whatever, it's legal to sell those products. But for some reason, either one side or the other, or both, have the ability to either totally terminate the contract or to modify the terms because of some condition or situation. So there are a couple reasons why this might be the case. So fraud, if I lie to you about something. So if I'm going to sell you my house and I tell you that the roof doesn't leak, or I'm going to sell you my used car, and I tell you I just had the mechanic look all through it and it's in perfect condition when I know the transmission's going to fall out any minute. Or somebody's under duress, they're buying something, they're basically being forced to do so. Or if it's a minor child with certain types of contracts. Those are all items that would give you the ability to either terminate the contract, get your money back, or modify it to make the other side pay for the cost to repair, something like that. Now, we often use this term as is for selling used items. If you're a used car dealer, you have to provide your customer with either a statement saying that there is a warranty of some type, or it's sold as is, meaning there's no warranties at all. If you're ever selling a used item, you want to sell it as is. The other time that this applies, and this is more so what I want you to know, is if there is some condition that will allow one side or the other to terminate the contract or modify it in some way. These are very common. And the other time this would apply is if the contract was not in writing and it needed to be. So let's talk about conditions first. Page 70. Okay, so this will not be a fill-in, so you don't need to memorize these for fill-in-blank, all right? So that's what not a fill-in. I just want you to know basically the idea, the concept. And the reason why is these are very common in almost most contracts. So you're going to have conditions and contingencies, especially in real estate. So if we're doing a purchase and sale agreement for a house or a commercial property, conditions and contingencies are going to be in almost every single real estate transaction, every single time. So for example, getting a loan. So let's say I want to buy your house for, say, $300,000. So we enter into a purchase and sale agreement where we agree today, bilateral express, that I will buy your house for $300,000. I'm going to give you $5,000 down as what we call earnest money. And then in 30 days, we're going to go to closing. And I'll pay you the additional $295,000 in cash. But in order for me to do that, I've got to get a loan. I don't have that much cash. And so I've got to go get a loan to pay you the balance of the purchase price. And so if I don't get a loan, either I don't qualify or the house has problems with it, the bank won't give me a loan, then I want to terminate the contract. I want to void out the contract. So I'll have a condition that says closing is contingent upon myself and the property qualifying for a loan of my choice. I'm going to have inspections performed to make sure that there's no pest and dry rot like termites or carpenter ants or dry rot or mold or mildew or radon. Make sure that the roof is in good condition, the HVAC, the heating, ventilation, air conditioning is in good condition, all that kind of stuff, right? And so if the inspection shows problems, like maybe standing water under the house, we're going to have that fixed before we go to closing, or I can call off the deal or lower the price. If it's on a well, you have to have a well test performed under Oregon law. You have to provide the results to the buyer and then also to the state. Test for E. coli and Listeria and make sure there's no salmonella or nitrates, that kind of thing. I may have a survey done in a real estate transaction to verify the boundaries of the property, make sure there's no encroachments like a fence over the line or anything like that. And don't, again, I'm not gonna test you all these details, okay? I just want you to know the concept, because this is really common in the real world. So these are called conditions and contingencies. So we have three basic types, which you don't really need to know for the test. Condition preceding, concurrent, which means at the same time, and subsequent, means afterwards. So before, during, after. So a concurrent condition at the same time would be like if I sold you a car, you give me the money, I give you the keys. Same time. After the fact would be like a repair warranty afterwards. So basically, long story short, what I want you to know, a condition gives you the ability to either terminate a contract or change the terms. Also, if the contract is not in writing and it needs to be by law, we'll make the contract voidable. So let's talk about that for a minute, because this will be on the final for sure. And that is on page 75. Excuse me. Okay, for sure, 100%. Here you go. List 4 types of contracts that have to be in writing, or a judge will not enforce them. They've got to be in writing. In other words, if they're verbal or not in the proper format, even if there's like text messages or something, they don't rise to the level of being a proper format, judge won't enforce it. All right, so I guarantee you I'll test you on this 100%, list 4. And the 4 I've highlighted are the most popular ones, or common. So this is called the statute of frauds. And this is a law that goes back to Old English common law. Old England, back in the day. And the idea of this law was to avoid having somebody lie about a transaction. So that way a judge knew that there really was a contract, to avoid fraud, right? So you don't have people lying, so you knew exactly what the terms were. And the reason why is these are areas that were deemed to be of such importance that you don't want to have a misunderstanding by purely verbal contract. Now, back in the day, most people couldn't read. So having a written contract was a big, big deal. Nowadays, we can go on Google and print out a 400-page contract in 2 minutes. But back then, these were a big deal. Still are today. All right, so, number 1, marriage. Now, back under English common law, this referred to a contract where parents would agree, when their kids were just little, to marry their children off together when they had a certain age, 16 or 14 or whatever, like Game of Thrones kind of thing. So, if Robb Stark doesn't marry whoever it was, then you could go to court and you could have a judge order the marriage because of the contract. That had to be in writing, and it would be a judicial wedding, basically. Was it Robb Stark? No Game of Thrones fans in here? Nobody? The Red Wedding? No? I read all those books. They're like this thick each. It took me a long time. Yeah, some of them were pretty boring, but all right. Now, we don't really have that here, right? But what we do have is people that are going to get married, before they get married, can enter into a contract called a prenuptial agreement. So that's where you have both spouses ahead of time agree, if we get married and we get divorced, here's how we're going to divide up our stuff that we brought into the marriage. And usually it's, each spouse will keep their own stuff that they had before. They keep it separate. And anything that they commingled, you split 50-50. Real common. Also, what happens if you die? My stuff, if I die, goes to my children. Your stuff, if you die, goes to your kids. Real common. That has to be in writing. You have to disclose what assets you have to the other side. That way they know. We usually do a spreadsheet. And otherwise the judge won't enforce it. We have Oregon law that says all that. All right, number 2. A contract that's going to last for more than a year under the terms of the contract. So if we enter into a deal that says, you're going to mow my lawn every month, once a month, and I'll pay you $50 each month to mow my lawn. For 2 years, 24 months. $50 a month, once a month for 24 months. That would have to be in writing to be enforceable. So that a couple months go by, and I just say, you know what, get out of here, I don't want you around anymore. If it's not in writing, too bad. You can sue me for what you've done up to that point, better than that, I can cancel it. Number 3, this is probably the most important one on here. All contracts involving the sale or transfer of real estate have to be in writing. And that's, no verbal contracts are enforceable to sell real estate. Judge will just flat out not enforce it. All right, number 4, not real common, but you run into this every once in a while. And this is what's called a promise by an executor. And this relates to when somebody has died and they owe money, like on a Visa card, but they don't have enough assets when they die to pay that debt. So then Visa says, okay, we're going to come after your executor. That's the person who's in charge of the estate. Well, they can't go after that person to have that person pay for their own assets for the dead person's death, unless they agree to it in writing. I really don't know why you'd ever do that. But actually, I have a case, no, I take that back. I'll give you an example. I have a lady who, for the last 6 years or so, has lived with her mom. Her mother just recently died. And they lived on a farm. And the farm's about 100 acres, so it has a fair amount of value to it. It's in this area. And the problem is, when she died, she owed a lot of money because of medical bills, about $100,000. And she didn't have any cash, and the daughter doesn't really have any cash either. So their land, the farm is free and clear. It's worth at least $500,000. So they're dirt rich, cash poor. It's real common with farms, right? So the problem is she wants to continue to live there. It's going to be her place. She's the only child, but she doesn't have any money to pay all these creditors. And so in order to do that, she's going to go enter into an agreement with the creditors that if you don't force me to sell the farm, give me a couple of years to figure things out, I'll make you monthly payments out of my own pocket. So something like that, all right? All right. Number 5. Again, we are talking about contracts that have to be in writing. So the future, in the future, sale of goods that have a value of more than $750 has to be in writing to be enforceable. So I call this the garage sale rule. And the idea here is, like, for example, if I'm having a garage sale. Let's say I'm going to sell my 1968 Gibson SG electric guitar, right? Electric guitar like AC/DC guy plays, what's his name, Angus Young, something like that. So 1968 vintage guitar, probably worth $4,000, $4,000. So I'm having a garage sale, and I put it up on the garage sale for $1,500 cash. And you come to the garage sale, you're like, wow, that's a $4,000 guitar, I want to buy that. So you say to me, hey, I will buy that for $1,500, I'm going to go to the bank right now and get the cash. And I'll be right back to buy that guitar. You're all excited, it's a good deal, it's a great guitar. So off you go to the bank. I'm like, yep, I'll sell it to you. So while you're gone, somebody else shows up like 5 minutes later. Cash in hand, $1,500. They give me the money, I give them the guitar. You come back 5 minutes after that, you say, here's the money, where's the guitar? I'm like, oh, I sold it. Like, well, we had a deal. Well, it wasn't right. Too bad, so sad. Sue me. That lame? Is that lame for me to do? It kind of seems like it, doesn't it? But wait a minute. Yeah.
So they owe you a guitar if you showed up, if you had it in writing and you showed up.
If it was in writing, then I sold it again, yeah.
Then they owe you a guitar.
But if it wasn't in writing,
Yeah.
too bad. Okay, so that seems kind of lame on my part, but let me flip it around. So now, same scenario, I've got a guitar for sale, you show up and you offer to buy it for $1,500, and I say, okay, fine, go to the bank, you say you're going to the bank, Somebody shows up with cash and I turn them away. Somebody else shows up with cash, I turn them away. Sorry, I already sold it. And you never come back. Now I'm the one holding the bag, right? So that's why we have this rule, it protects both sides. So that's why I call it the garage sale rule. So we're talking the future sale of goods. So long story short, cash talks, right? Take the cash. All right, number 6, I call this is the co-signer rule. I won't spend a lot of time on this because it's pretty obvious. A co-signer is when I agree to pay your loan. Like if you want to go buy a car but you don't have good credit, so I will agree to pay that loan if you default as a co-signer. It's called a guarantor, third-party guarantor. So like if my son wanted to go buy a car, he doesn't have any credit, so I'm like, okay, fine, I'll co-sign the loan, and if he doesn't make payments, they'll come after me for the payments. That has to be in writing, so no verbal co-signer. Got to be in writing to be enforceable. Now I want you guys to remember 4 of these, okay? List 4, and I've highlighted the most important ones I want you to know. So fill in the blank, list 4 types of contracts that must be in writing to be enforceable. So how can you remember this? I'll give you a little goofy way to remember this. They got married for more than a year, and they bought a house that cost more than $750. How's that? Married for more than a year, bought a house for more than $750. It's an easy way to remember those 4. All right. Excuse me. So again, back to page 68. So if the contract is not in writing and it needs to be, it's voidable, the judge will not enforce it, and basically it creates no obligation at that point. So let's move on now. Now let's start talking about the 3 elements of a contract. Oops, where did I go? Page 66. And let's talk about a little bit more detail on these 3 elements. Hold on just a minute.